Hello friends, welcome to my channel The Economy Crown. 73%. That's the number that changed everything I thought I knew about the silver market. That's the number they never wanted you to see. And that's the number that proves what you're being told about silver prices is a lie. The world's largest silver exchange, the COMEX, is telling you that silver is worth around $28 an ounce. They're telling you supply is fine. They're telling you the market is functioning normally. But here's what they're not telling you. Their own vaults, the very foundation of the entire paper silver market, are 73% empty compared to what they should hold. And the implications of this are terrifying. Look, I know what you're thinking. Another clickbait video about silver manipulation. Another conspiracy theory. I get it. I was skeptical too. But what I'm about to show you isn't theory. It isn't speculation. It isn't opinion. It's their own data, published on their own website, hidden in reports that 99% of investors never read. And once you see it, once you really understand what these numbers mean, you will never look at the silver market the same way again. In the next 25 minutes, I'm going to show you 1. The exact vault reports that prove the 73% number is real. 2. Why they're hiding this and who benefits from you not knowing. 3. What happened the last time vaults got this empty and what it means for silver prices. 4. The specific signals that will tell us when this whole system breaks. And 5. What you can do right now to protect yourself and potentially profit from what's coming. But first, we need to understand how this whole system actually works. Because once you see the plumbing behind the curtain, everything starts making sense. Let's dive in. Okay, so what is the COMEX and why does it matter? COMEX stands for Commodity Exchange. It's the primary futures and options market for trading metals like gold, silver, copper, and aluminum. Think of it as the official price-setting mechanism for silver in the Western world. When CNBC tells you silver is at $28, that price comes from COMEX. When your local dealer prices silver eagles, they're basing it on COMEX. When mining companies sign contracts, COMEX. When banks hedge their positions, COMEX. In other words, this one exchange controls how the entire Western world values silver. Now, here's where it gets interesting. Most trading on COMEX isn't physical silver, it's paper silver. Futures contracts, options, derivatives. These are promises to deliver silver at a future date. And in theory, the system works fine. You trade paper, and if you want the real metal, you stand for delivery and get your silver. Simple, right? Except there's a problem, a big problem. What happens when more people want the physical silver than actually exists in the vaults? Picture an iceberg. Above the water, visible to everyone, you have the paper silver market. Billions of ounces trading every day, liquid, active, healthy. Below the water, hidden from most investors, you have the actual physical silver backing those contracts. And here's what most people don't realize. For every 1 ounce of physical silver in COMEX vaults, there are estimates of 300 to 400 ounces of paper claims. Now read that again. 300 to 400 paper claims for every 1 real ounce. It's like a bank having $1 in the vault for every $400 people think they have in their accounts. And if everyone... Let's look at the actual numbers. And I mean the real reports, straight from CME Group, the company that owns COMEX. COMEX reports silver holdings in 2 categories. Registered silver. This is silver that's available for delivery against futures contracts. This is the silver that actually backs the market. Eligible silver. This is silver stored in COMEX vaults, but not available for delivery. It's privately owned, just using the vault for storage. Now pay attention, because this is where they play games with the numbers. When COMEX reports total silver holdings, they combine both categories. So headlines say, COMEX has 280 million ounces of silver. But look at registered silver, the silver that actually matters for the paper market. It's down to just 31 million ounces. Now let's put that 31 million ounces in perspective. In 2021, during the first silver squeeze, registered silver was around 150 million ounces. Today, 31 million. That's a drop of nearly 80%. But wait, I said 73% in the title. Let me show you where that number comes from. If we look at the ratio of registered silver to total open interest, meaning all the paper contracts outstanding. In a healthy market, you'd want at least enough registered silver to cover, say, 20-25% of open interest as a safety buffer. Right now, that ratio has collapsed to approximately 27% of historical norms. In other words, compared to what should be in these vaults to safely back the paper market, they're 73% short, 73% empty, and falling every single week. But it gets worse. Let me show you the delivery data, because this is where the real panic is hiding. Every month, some futures contracts expire and holders can choose to take physical delivery. Watch what's been happening. Delivery requests have been surging. Month after month, more investors are saying, "I don't want paper, give me the real metal." And COMEX is struggling to keep up. See these numbers? These are warrant cancellations. That's the technical term for when silver is pulled out of the registered category. Translation, silver leaving the vaults. September, 2 million ounces gone. October, 3.5 million ounces gone. November, 4 million ounces gone. The vaults are bleeding silver, and they can't stop it. Now, some people will say, so what? They'll just get more silver. And that brings us to the next part of this story, the part they really don't want you to understand. Where is all this silver supposed to come from, and why can't they get it? Silver isn't just a precious metal anymore, it's an industrial metal, and demand is exploding. Solar panels, each one needs silver, and the world is installing them at record pace. Electric vehicles, silver in the electronics, the batteries, the connections. Every EV needs more silver than a regular car 5G infrastructure, smartphones, medical equipment, water purification. Silver is in everything, and for the past 3 years straight, the world has consumed more silver than it's mined. 2021, deficit. 2022, bigger deficit. 2023, even bigger deficit. 2024, the biggest deficit ever recorded. We are literally running out of above-ground silver. But wait, you might say, can't they just mine more? Here's the problem. Silver ore grades have been declining for decades. The easy silver is gone. What's left is harder to extract, deeper underground, more expensive to process. Opening a new silver mine takes 10 to 15 years from discovery to production. And here's the kicker. There's been almost zero major silver discoveries in the past decade. The pipeline is empty. Meanwhile, above-ground stockpiles that took decades to build are being drained in just a few years. The math doesn't work, and everyone in the industry knows it. Which brings us to the real question. If the vaults are emptying, if there's a supply deficit, if industrial demand is soaring, why is the price of silver not reflecting this? Why is silver still trading at prices below its 1980 high over 40 years ago? Why would the free market price a critical, scarce resource as if there's endless supply? Unless the price isn't free, unless someone is controlling it, and that someone has a very good reason to keep silver prices low. Let me show you who's behind this and why they're so desperate to hide the truth about those empty vaults. In 2020, JP Morgan paid $920 million to settle charges of manipulating the precious metals market. Read that again. Nearly $1 billion. Not allegations, not accusations. A settlement they paid. The Department of Justice called it spoofing, a technique where traders place fake orders to move prices, then cancel them before execution. For years, JP Morgan traders manipulated silver and gold prices. And here's what should make your blood boil. This wasn't a few rogue traders. This was systematic. Thousands of instances over nearly a decade. And the fine? $920 million. Estimates suggest JP Morgan made billions from these manipulative trades. The fine was a cost of doing business, a parking ticket. And guess what? They're still the largest player in the silver market. Here's how the suppression works. In simple terms, banks like JP Morgan hold massive short positions on COMEX. A short position is a bet that prices will go down. So, if you're short millions of ounces of silver, you profit when prices fall. And if you're the biggest player in the market, you have the power to make prices fall. Ever notice how silver often crashes suddenly, usually overnight or early morning when trading is thin? That's not random. That's coordinated selling. Dumping paper contracts to trigger stop losses and panic. They short paper silver. Price falls. They cover their shorts at a profit. Rinse and repeat. And as long as no one actually demands physical delivery, as long as everyone plays the paper game, they can keep doing this forever. But here's what's changing. People are waking up. Those vault numbers I showed you, that 73% drain, that's not happening by accident. That's happening because more and more investors, from retail stackers to hedge funds to sovereign nations, are saying, enough paper, we want the real thing. India is stockpiling. China is accumulating. Russia has been buying for years. The Middle East is converting dollars to metal. The East knows what the West is hiding. They're not playing the paper game. They're taking the physical. They're draining the vaults. And at some point, maybe soon, there won't be anything left to drain. That's when the price discovery happens. That's when the paper market breaks. That's when everything changes. This has happened before. Let me show you what a market looks like when paper promises meet physical reality. March 2022, the nickel market. In a single day, nickel prices doubled, then doubled again. Why? Because a Chinese tycoon had a massive short position, and when prices started rising, he couldn't cover. There wasn't enough physical nickel. The London Metal Exchange literally canceled trades. They changed the rules mid-game to save the short sellers. People who were right, who bet on nickel going up, had their profits stolen because the system couldn't handle the truth. Now imagine this happening in silver. But silver isn't just a commodity, it's money. It's been money for 5,000 years. And unlike nickel, millions of regular people own silver. They're watching, they're waiting. What happens when COMEX registered silver drops below 20 million ounces? What happens when a major industrial user, say a solar panel manufacturer, can't get delivery? What happens when a sovereign nation says, we're not accepting paper, we want our metal, now? Some analysts predict silver could hit $50 relatively quickly. That's just matching the 1980 and 2011 highs. Others see $100, $150, even higher. And when you understand the supply deficit, the industrial demand, the monetary demand, the empty vaults, $50 starts to sound like the floor, not the ceiling. The question isn't if this happens. The question is when. And the answer is, we don't know exactly. But we do know that every day, every week, every month, the vaults get emptier, the deficits get bigger, the paper promises pile higher. Something has to give. The only question is, will you be positioned before it happens? Or will you be watching from the sidelines, wondering why you didn't act? Okay, so what do you actually do with this information? Let me give you 5 concrete steps. Step 1, educate yourself on the difference between paper and physical. If you own a silver ETF like SLV, understand what you actually own. Hint, it's not silver, it's a claim on silver, and the fine print in those prospectuses is interesting. Step 2, consider physical silver in your own possession. Coins, bars, whatever you can afford. Something you can hold, something no exchange can freeze or redefine or cancel. Step 3, watch the COMEX registered numbers. They publish vault reports daily. I'll link resources in the description. When registered silver drops below 25 million ounces, pay close attention. Step 4, understand premiums. The price difference between the spot price and actual physical silver tells you something. When premiums spike, the physical market is screaming what the paper market is hiding. Step 5, don't go all in on anything. I'm not telling you to put your life savings into silver. I'm telling you to understand the risks in the current system and allocate accordingly. Look, I want to be clear about something. I'm not telling you what to do with your money. That's your decision. I'm not promising silver is going to moon tomorrow. Timing markets is a fool's game. What I am telling you is this. The information I just showed you, the vault numbers, the supply deficits, the manipulation evidence, this is public data. Anyone can find it, but almost no one looks because it's buried in technical reports, because the mainstream media doesn't cover it, because the people who benefit from you not knowing spend a lot of money making sure you don't know. Now you know. What you do with that knowledge is up to you. If this video made you think differently about silver or about markets in general, do me a favor. Hit that subscribe button, turn on notifications, because this is just the beginning. Next week, I'm going to show you something even more disturbing. What happened the last time vaults got this low, and the specific warning signs that appeared just before the market broke. You're going to want to see that. Until then, stay informed, stay skeptical, And always question the official narrative. I'll see you in the next one.